Hi, I'm Kylie and welcome to this week's episode of Money, 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 where we cut out the jargon and talk about all things financial. Hi and welcome back to Money, Money, Money. Today I have with me Craig McInnes, who's Head of Distribution for Heartland Seniors Finance, and he's going to help us unravel some of the mysteries about reverse mortgages. Welcome, Craig.
Oh, thanks, Kylie. Great to be here.
Can you give us a little bit of information about what is a reverse mortgage and how does it work?
Well, reverse mortgage in its simplest form, it's like a conventional mortgage, except for the fact that clients do not need to make any repayments if they don't choose, with a one-off payment at the very end of all the interest and fees rolled up on top of the principal.
Okay, so that's great. They don't actually have to make any repayments over that term.
No mandatory repayments. No.
Okay, so that's really termed, they're capitalising the interest,
Yep.
correct?
Yep.
Yep. And one of the big questions that we get asked a lot is, will a borrower always retain ownership of their home?
A critical part of a reverse mortgage is much like a conventional mortgage. You own the house. Heartland Seniors Finance will take a registered mortgage over the property, but ultimately it's your house, which means you're responsible for things like rates, insurance, and those sorts of things, and we're just simply a mortgagee.
Yeah. And it is important that clients remember that they do have an obligation to the bank that they continue to make those payments for their rates and water rates, isn't it?
It is their house in every other respect.
Okay. Now, I've heard quite a bit about no negative equity guarantees. Can you just explain a little bit about those? Because they can be quite confusing for people.
Yeah, no negative equity guarantees legislated under the National Consumer Credit Protection Act. Very important from a client point of view. So as a lender, it's managed for us to offer that feature, which means that no matter what happens to interest rates, what happens to house prices, what happens to any other events over the period of the loan, is that the client can never owe more than the value of the property.
Great. So it's a great protection mechanism.
It's a great
for
protection.
them, isn't it?
That would be an exceptional set of circumstances for the loan to actually get to the value of the property. Would require a whole list of things to go wrong.
Yeah.
But it's a good protection. That's our problem, not the client's.
Yeah. So who can apply and how can they be eligible for a reverse mortgage?
Yep, look, relatively straightforward. The minimum criteria is age-wise. You've got to be 60 or older to apply. So anyone who's 60, property location and must be a residential property, and it must be in a postcode that we're prepared to do.
Okay, so that's what they mean by postcode restricted sometimes. Yep. If you live in a certain postcode, you're unable to do a reverse mortgage.
Yeah, that's true. Our postcodes that we do, as a matter of course, cover about 85% of the Australian population.
Yeah.
There are some postcodes that we can't lend to, or we might lend to on a lesser basis. So each case on its merits, but there are some that we just simply can't lend to.
Okay. And can you use an investment property?
You can. We have Heartland has a special feature, an investment property loan, which also incorporates holiday houses. So if the client has a non-owner occupied property they want to put up, we'll put it together much the same way as our conventional reverse mortgage, except for there'll be a slightly lower loan to valuation ratio. But we do a very steady stream of business in that category.
Yeah, I can see why you would do it against an investment property.
Yep.
And one of the things that I love about Heartland Finance is that you do aged care loans, and that's a real issue in our community at the moment, is for people trying to finance into aged care. Can you just explain a little bit about those for us?
Yeah, look, it's a really important part of our weaponry. We developed this product 2 years ago. It is a 5-year term loan, much the same features as a conventional reverse mortgage. It has a higher loan to valuation ratio, 5% higher than standard. It is particularly aimed at people who are leaving their family home and moving into residential aged care. When people do that, they'll incur refundable accommodation deposit. Depending on where it is, that could be anything between 200,000 and 1.5 million. So it's a significant cost.
It's expensive, isn't it?
It's very expensive. So for some families, retaining the former home is it's an important part of it, even if it's just for the emotional side of it. So our product allows them to make an informed decision over a longer period.
Yeah, and to do that transition maybe a little bit easier.
Yeah, I think so. That typically many of the families that we get involved in might hang on to the house for another 2 or 3 years, and at that point, then mum's never coming home. So that's
ready to let it go. Then.
Ready to let it go at that point.
Yeah. So on the whole, how much can people borrow?
All depends on the value of the property.
Yeah.
And the age of the youngest applicant. So if there's more than one, we're interested in the youngest applicant's age. Best way to remember is the age of the youngest applicant minus 45. So, for example, if you're 70, minus 45 is 25%. If you're 80, 35%.
That's great. I've been doing these for a long time and I've never come across that before. I'll file that one away for myself, that one.
It's a dummy's guide to LVRs.
Well, there you go. What type of fees are generally involved in a reverse mortgage, Craig?
Yep. We don't charge an application fee nor a valuation fee, but we do charge a settlement fee. For us, it's $495. That is deducted from the loan proceeds.
Sure.
Now, that covers the valuation and the application where the valuation is less than $2 million. If it is more than $2 million, the valuer will charge us a higher fee and we will pass it on to the client. So we'll go off and get a quote where the property is valued at more than $2 million.
That's really reasonable, the fees that Heartland is charging.
Yeah, and importantly is at the back end, so the clients don't have to find it
up front.
Up front, which can be, for some clients that can be really difficult.
Exactly. Now, a really important point is, what can they do with the money?
If it's personal and it's legal, then it's,
legal's good.
Yeah, legal's critical. So if it fits those two broad criteria, typically what we see is almost everyone borrows some money to do some home renovations.
Yeah.
Improving and things like bathrooms and kitchens are, you don't have to be a senior to have those things in your house needing renovation. Remarkable amount of people refinancing existing home loans or other debts, credit card dets, those sorts of things. They're probably our two mains. Travelling,
so debt consolidation is a great one that they can actually use.
And there are probably a surprising amount of people who are still servicing home loans well into their 70s.
Yeah.
Retirement income streams are not typically designed to service debt. They're to live
survive on.
Yeah, to survive in retirement. So people will do it hard, and we do a lot of that sort of lending. Home renovations is probably a primary one. Cars, trips, helping the kids to some degrees. Income streams is a really important part of it.
Yeah.
So
well, that actually leads me to my next question: is what types of reverse mortgages are there?
Yep. So there are 3 options available within our standard reverse mortgage product. The first one is lump sum. So typically, all clients will take a portion of the loan that they've applied for by way of lump sum. To do whatever today's agenda is. Monthly income or regular income can be monthly, quarterly or annual. Most people take monthly, and then that's a really important and useful thing for people.
I think that's a great part of reverse mortgages.
And it's a really popular feature we find, and even it can be as little as $800 a month, $1,200 a month, which is like having an extra pension. For many, so and that's the sort of one that they will have the luxury of, going to the movies once a month and having coffees and those sorts of things. So that's really important. The other one is what we call a cash reserve line of credit, if you wish.
Yep.
So you can have any one or all 3 of those options, whichever of those options suit you within the loan, that we can put that together for you.
So leading from that is, do clients need to see a financial planner, or perhaps go to Centrelink just to see if that's going to have any effect upon their pension? Or
it's not mandatory to see a financial planner. We encourage clients to go and see Centrelink. Ultimately, Centrelink will say it's a return of capital, not income. But you need to hear it from Centrelink, not from us.
Exactly.
So going to talking to Centrelink, saying this is what I'm planning to do. Get the thumbs up from them. It's a really important part. We encourage clients to talk to their kids if that's important to them. Again, it's not mandatory. It's under the Privacy Act. It's a client's
So you don't
call.
have to speak to your kids if you don't want to about it?
Yeah, client's call on that one. But we would encourage you to involve as many people. Importantly, involve those people so that they're educated as well. And,
exactly. And legal advice? Is there a requirement to seek legal advice when signing the document?
Mandatory under the National Consumer Credit Protection Act to get legal advice. Then
Yep.
the lawyer's job is to provide advice around the contract. What are the client's rights? What are the client's obligations?
Yeah.
So,
And do you find the solicitors are on board with it, that they understand it?
yeah.
Yeah.
It hasn't always been that way. It's
No.
probably fair to say, but over the journey, you know, reverse mortgages have been a mainstream product here in Australia for, you know, probably 15 years now. So that's enough for lawyers to get comfortable with it, and, you know, importantly, they're giving legal advice around the contract, about the contract, not about the loan.
I know in the beginning when I first wrote them, it was difficult to find a lawyer, which is why I was asking you if they're more on board now.
I think that the thing about reverse mortgages is that the biggest enemy is apathy or misinformation. So
Yes.
clients, you know, have got to seek out the right people to give the right advice. Otherwise, you'll get all sorts of weird and wacky connotations on what it could look like.
Exactly. And why do you think reverse mortgages have become so popular in recent times? Because we're certainly seeing an uplift in inquiries.
Look, most definitely, I think the stars have aligned in reverse mortgage land that house prices are up, particularly on the eastern side of the country.
Not in WA, it's 2017, they're still not good.
Very strong in my hometown of Melbourne, and even stronger in New South Wales and Brisbane to a lesser degree. So really strong, low interest rate environment by Australian standards. We've seen lower for a long period of time.
Yeah.
And people, I guess, are more attuned now. They understand, you know, reverse mortgages. They understand that their family home is by far their biggest asset.
Yeah.
For most people.
Exactly. That just leads me to the last couple of questions. Is one, what are the risks for people with a reverse mortgage?
Well, I touched on before the apathy or the misinformation. So I really would encourage people, if they're looking for, you know, they're contemplating a reverse mortgage, to talk to an expert, get proper advice, sum up how it relates to your circumstances, and then go from there. So don't take on board some of the things that can spill out of the press or down the RSL or the Bowls Club, because they're not always on the right track. Reverse mortgage is a mortgage loan like any other, so interest rates can and will change over the period of time. House prices can and will change, and, you know, we've all lived in markets where it's gone up and down and tracked sideways. So at some point the markets will change, so you need to be aware of those things. Other than that, getting the proper advice is
And they've
critical.
got that no negative equity protection, which is really an essential part of
Look,
it, isn't it?
it would take, as I said before, it would take an exceptional set of circumstances for no negative to kick in.
Yeah.
It's worth also just a bit of an off the chart stat that if interest rates are currently at 6, your house only needs to grow by about 1.5 to keep pace with, so your house price is increasing at the same amount your loan is going up. So so for most houses over a period of time will rise by inflation, say 3%. So you should be well ahead of the track, but, you know, each house is different.
Exactly. And there is a great website that you can check out, which is ASIC. They have a great, some calculators on there. Or you can look on the Heartland Seniors Finance website, because they also have a lot of information about the reverse mortgage product. So thank you for joining us today, Craig. It's been great.
Thanks, Carly.
Hopefully that's shed a little more light on reverse mortgages, and we'll see you next time on Money, Money, Money. Thanks for watching Money, Money, Money. If you liked this video, hit the red subscribe button. If you'd like to know more information, you can follow us on Facebook or go to our website, linked in the information box below.